Starting out as an investor can often feel like being thrown into the deep end without a life jacket. I recall my early days of investing, so many options, but so little guidance. And like many of us, we didn't have a family background in investing to lean on. The financial news was my guide, and hearsay from people around me served as education. This was well before the era of crypto and tech stocks, Reddit, and social media. Investing just wasn't as popular or anywhere near as easy as it is today. Back then, I, like countless others, gravitated to what I knew: blue chip stocks, high dividend payers, the big banks. So I jumped in and had a go. But after about 18 months, my promising investments had turned out to be more mirage than an oasis. My bank shares were flat, and the mining company I'd taken a punt on faced a downturn. As a young adult, early 20s, I was just earning a full-time salary for the first time, and I was keen to keep hold of my money. So I sold out and took what I had back to the bank. Yeah, the stock market burned me, but in reality, it did exactly what I was supposed to do. It was me who was expecting too much too soon. Since then, I've realized that investing isn't the 100-meter dash, but a marathon. It's not about the breakneck race to the finish, but understanding the route, pacing yourself, and finding comfort in the journey. And that's why I have this perspective I'd like to share, especially for the new investors out there. Instead of chasing rewards and riches, how about we invest for comfort? Let's unpack this a bit further. When you first get into investing, there's this huge temptation to jump onto the latest trend or hot stock, right? Here's stories of people making tons off Bitcoin or some tech startup, and you think, "Oh, I want a piece of that." But that's like trying to run before you walk. Think about it. You wouldn't ever go from not having ridden a bike to going into a 250K race, would you? So why would you jump in and invest in something as complex and volatile like Bitcoin without understanding the basics first? That's where lack of experience or understanding of investing comes into play. You don't know that Bitcoin is one of the most volatile ways you can start investing. People call handbags an investment, so I do get it's nearly impossible to distinguish what they should be investing in first. The unfortunate truth is that many new investors are lured in by these shiny new objects like the Bitcoins or the new tech startups. They're drawn in by the appeal of one hot investment, buying at the peak and then get burned. And then they get turned off investing altogether, which is such a big mistake. Doesn't have to be that way. Here's where the concept of investing for comfort comes in. It's about choosing investments that you understand and feel comfortable with, rather than chasing after the biggest potential rewards. It's about investing in a way that aligns with your financial goals and risk tolerance, instead of getting swept up in the market hype and frenzy. Because when you invest in what you understand and are comfortable with, you're less likely to make impulsive decisions based on market fluctuations or panic selling. Instead, you'll be more inclined to stick around with your investment strategy and ride out the ups and downs. But what does investing for comfort look like in practice? It starts with understanding your comfort zone. Your comfort zone is investing in this intersection between what you understand and what you can afford to invest, and what aligns with your financial goals. It's a safe place where you feel confident in your investments and aren't constantly stressing about market movements. For example, let's say you're interested in the tech industry because you work in it and you understand how these companies operate. Investing in tech stocks or a tech-focused ETF could be within your comfort zone. Or maybe you're a real estate buff and you enjoy researching property values and market trends and commercial real estate. In that case, investing in a real estate investment trust, a REIT, could be within your comfort zone. Remember as well, there's no one-size-fits-all approach to investing. Your comfort zone might look very different from someone else's, and that's okay. The key is to find what works for you. To add another layer to the concept of comfort investing, here's something I personally live by as an investing principle, and I think you should consider it too. It's called the 2-year rule. It's about holding on to any new investment for at least 2 years. It's about giving your investments room to breathe and grow rather than making knee-jerk reactions to every market fluctuation. Even the best investments can have a bad day, week, or couple of months. But that doesn't mean you should bail at the first sign of a downturn. 2 years, in my experience, is a good time frame to get a sense of how your investment performs under a few different market conditions. It's long enough to weather some market cycles, but not too long that you feel like your money is tied up and you can't get out of it. And most importantly, it keeps you from making impulsive decisions that you might regret later. If you want to know if you're going to be comfortable owning an investment, then think about what you might do in the first 2 years of having it if things go really bad or ugly. Now let's explore how you can kickstart your journey to comfort investing. Here are 4 actionable steps. 1, identify your comfort zone. Your first task is to take a good look at your own knowledge. Perhaps you work in healthcare, or maybe you're in IT or software. Utilize this knowledge when deciding on your investments. Secondly, evaluate your financial situation. How much can you comfortably invest without causing yourself undue stress? Keep your financial goals in mind. Are you investing for retirement, saving for a house, or kids' education? Make sure your investments align with these objectives. Then start small. The beauty of modern investment platforms is that you don't need vast sums of money to begin with. Micro investing and fractional shares now allow you to start with whatever you're comfortable with. If that's $100, so be it. Consider it like a paid trial for your investing journey. As you grow more comfortable and confident, you can incrementally increase your investments. Apply your own rules. Once you select an investment, consider how you want to measure your comfort with it. As I mentioned, I like to be investing in things I'm happy to hold for at least 2 years. Set your own method and commit. And one more, gradually expand your investments. Start with the familiar, perhaps buying shares in the company you use and love, like Apple. And as your confidence grows, consider expanding your horizons. Maybe you want to explore climate change and stocks, ETFs related there, or another sector that you're finding knowledge in. Here's the thing though, when I started investing, I didn't know all this. I began my journey investing in high risk, high reward options, but not even fully understanding what I was getting myself into. There were moments of doubt, moments of question if I was cut out for it, but I didn't quit. I learned from my experiences, adjusted my approach, and over the years found my rhythm. Now I'm landing in a comfortable spot, knowing my strategy aligns with my understanding, my risk tolerance, and financial goals. It's a strategy focused on building wealth for the long term. And this comfort hasn't come overnight. It's a result of persistence, patience, and a willingness to learn. Remember, investing is such a personal journey with its twists and turns. By focusing on comfort, you can make the journey less daunting, less overwhelming, and more rewarding. Use your knowledge, lean into your interests, start small, and gradually build up. The approach keeps you grounded and in control. Consider your comfort at the core of your investment journey, and who knows, like me, you might just find yourself settling into a groove that not only brings you comfort, but builds you wealth in the long run. And after all, that's the ultimate reward, isn't it? Give us a thumbs up, subscribe if you can. Look forward to seeing you again.